You've got this killer startup idea, the next Amazon, the next Facebook, the next freaking unicorn, but ideas are just that, ideas. To turn that vision into a reality, you need one thing, capital. That's what we're diving deep into today. How to hustle your way to funding and get your startup off the ground. We're talking bootstrapping, angel investors, VCs, the whole 9 yards. I'm giving you the playbook, the real deal, no BS. Let's go. First things first, you gotta know where the money comes from, right? And trust me, there are more options than you think. You can bootstrap it, which means digging deep and using your own savings. It's scrappy, it's hard, but it gives you ultimate control. Then there's the classic friends and family round. Hit up your Uncle Steve, your college roommate, anyone who believes in your vision. Just make sure you keep it all above board, legal documents, the whole shebang. Now if you're thinking bigger, we're talking angel investors. These are high net worth individuals who invest in early stage companies. They can bring not just cash but invaluable connections and mentorship. Think of them like your business fairy godparents but with better suits. And then there are incubators and accelerators programs designed to help startups grow. They provide mentorship, resources, and often a small investment in exchange for equity. Y Combinator, Techstars, these are the big leagues, folks. Don't forget about the power of the crowd. Crowdfunding platforms like Kickstarter and Indiegogo can be gold mines for certain businesses. It's a way to validate your idea, get pre-orders, and raise capital all at the same time. And finally, the holy grail for many startups, venture capital. Look, you could have the best product in the world, but if you can't articulate its value, you're dead in the water. Investors are looking for businesses that solve real problems, and they need to see that clearly in your value proposition. What makes your startup unique? What problem are you solving that no one else is? And most importantly, how big is this market? Investors want to see a massive potential for return, so think big. Take Airbnb for example. They didn't just create another hotel booking site. They tapped into a fundamental human desire for connection and experience. Your value proposition is your elevator pitch on steroids. Get it right, and you'll have investors lining up at your door. Let's talk business plans, baby. I know. They sound about as exciting as watching paint dry. But trust me, a well-crafted business plan is your secret weapon in the fundraising game. Think of it like your startup's resume. It needs to be sharp, concise, and packed with all the right information. Start with a killer executive summary that grabs the reader's attention from the get-go. Next up, market research. You need to know your target audience inside and out. Don't forget about your revenue model. How are you going to make money? What are your pricing strategies? And finally, your go-to-market strategy. Alright, it's showtime. Your pitch deck is your chance to bring your vision to life and captivate investors. This isn't just about numbers and charts. It's about telling a compelling story that connects with your audience on an emotional level. Remember Uber's early pitch deck? It was simple, visually appealing, and it told a clear story about the problem they were solving, making transportation as reliable as running water. Your pitch deck should be no more than 10 to 15 slides, and it should cover the essentials. Your problem, your solution, your team, your market opportunity, your traction, more on that later, and your financial projections. Keep it concise, engaging, and visually appealing. Use high-quality images, infographics, and minimal text. Remember, you're telling a story, not giving a lecture. Practice your delivery until it's flawless. Talk is cheap, my friends. Investors want to see results. That's where traction comes in. Traction is proof that your business is gaining momentum. It could be user growth, revenue, website traffic, partnerships, anything that demonstrates progress and market validation. Look at Slack. Before they became a billion-dollar company, they focused on building a product that people loved. Don't be afraid to share your early wins with investors. Numbers don't lie. And in the startup world, traction is the ultimate currency. Now, let's talk valuation. This is where things can get tricky. You need to determine how much your company is worth, but you also need to be realistic. Don't overinflate your valuation just to impress investors. Your valuation should be based on factors like market size, revenue, growth potential, and comparable startups in your industry. Remember, it's better to have a fair valuation and secure funding than to price yourself out of the market. Greed might feel good in the short term, but long term, it'll bite you in the ass. Listen up, entrepreneurs, fundraising is not a solo sport. It's about building relationships with investors, getting your name out there, and networking like your life depends on it. Attend industry events, connect with investors on LinkedIn, and don't be afraid to cold email, the right way of course. Remember, investors are people too. They want to invest in founders they connect with, founders they believe in. Authenticity wins, always. Congratulations! You've secured a meeting with an investor who's interested in your business. Now comes the fun part: negotiation. This is where you need to be firm, know your worth, and be prepared to walk away if the terms aren't right. You'll be discussing things like equity split, investment terms, board seats, and more. Don't be afraid to push back, ask questions, and negotiate for what you believe is fair. You want to find investors who are aligned with your vision and who will be valuable partners in your journey. Don't settle for anything less. Let's face it, rejection is part of the game. You're going to hear no a lot more than yes, especially in the early stages. But here's the thing about rejection. It's not fatal. In fact, it can be one of your greatest learning opportunities. Don't let it discourage you. Instead, use it as fuel to improve your pitch, refine your strategy, and come back stronger than ever. Remember Airbnb? They were rejected by countless investors before they finally found someone who believed in their vision. Rejection is just a redirection, a chance to pivot and find a better path. We're almost at the finish line, but there's one crucial aspect of fundraising we can't ignore: compliance. You need to make sure you're playing by the rules, both legally and ethically. This means understanding securities laws, ensuring accurate financial reporting, and being transparent with your investors. Don't cut corners or try to game the system. It's not worth jeopardizing your entire business. Look at Canva. They've built a multi-billion-dollar design platform while staying true to their values and maintaining a strong ethical compass. So, build a company you're proud of, a company that operates with integrity and transparency. That's it, entrepreneurs. You've got the knowledge, the tools, and the mindset to conquer the world of startup fundraising. Remember, it's a marathon, not a sprint. Be persistent, be passionate, and never ever give up on your dreams. Now I want you to do me a favor. Don't just watch this video and forget about it. Take action. Start implementing these strategies today. Share this video with your fellow entrepreneurs. Now go out there and make it happen.